please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters, the show we're going to highlight all the buzzing stocks of the day. But what a morning it has been. The Nifty, the Sensex, and really the big batsman today has been the Nifty Bank. All of them at the high point of the day, Mangalam.
Absolutely, Nigel. You know, all at the high point of the day, and there are a couple of things that we really need to keep an eye out on. The fact that it is the Nifty Bank weekly options expiry. It's a Thursday. We keep talking about options, but today it's important because usually we talk about what is being written. But right now, the call writers, they are running for cover. 26,500 call. Yesterday was the maximum open interest there. 1 hour into trade, the 26,500 call running for cover. The writers out there, 26,400 call writers running for cover there too. 26,500 put writers. They believe they have it in them. The game is in their court. So those guys are writing 27,000 call. There is some action. Let's see what happens out there. The Nifty itself, 10,800 put written, 10,900 put written. We're talking about the mount. I don't know what happens there.
Absolutely, Mangalam. You know, just a couple of factors there. Oh, Ultratech Cement has moved to the low point of the day. I think my lunchtime is going to be Ultratech Cement. You know, that one we're looking at. And the Midcap index, it's a relative underperformer today. Also keep an eye out on the bond yields. We've been keeping an eye out on that, but in fact, you know, all those who are shorting the Nifty Bank, they would have got stumped. But just keep an eye out on that, Mark. The bond yields as well, they're just ticking up a tad bit as we speak.
Yeah, you spoke about your lunch being Ultratech Cement. My lunch probably could be pizzas. Jubilant Foodwork, 1971 on that stock. Remember it being 1931 just 2 years ago. Fell all the way down to 785. Then the new management came in, renewed their strategies, perhaps got some better pizzas. Numbers tomorrow. Let's see whether the company delivers more than just pizzas and delivers numbers as well at a record high.
You got ITC as well, right?
ITC as well, but no smoking out there. ITC is at the high point of the day. Perhaps, you know, it's the HUL impact. But first up, all the top stories that we're tracking at this point in time. Bulls continue to take charge on Dalal Street. Markets hit fresh record highs with a rally led by financial stocks. Mindtree tops the Midcap index.
And the rally in banking stocks continues as the government mulls a mega FDI push in the sector. The government is weighing options to allow 100% FDI in private banks and 49% FDI in public sector banks. That's a big CNBC TV 18 exclusive.
Hindustan Unilever delivers an all-round beat on the earnings front in the third quarter. Volume growth comes in at a robust 11%, crossing double digits for the first time in 6 years. The stock a bit in the red after the virtual run-up, but the management expects gradual demand recovery to continue.
And Mindtree tops the Midcap index after reporting a strong third quarter. The margin improvement is seen across segments, and investors, they duly reward the stock.
UPL gains over 3%, 3.5% after CLSA initiates coverage on the stock. Target price of $960 per share. The foreign broker estimates an 18% earnings compounding over the next FY17 to FY20.
Okay, all right. Then the Nifty, in fact, we saw some mild profit booking, but we have climbing again. We moved to the high point of the day. So very, very good going. ITC, smoking hot, that moves higher, and L&T, that's the other one. So it's not just the banking stocks. Yes, the bank Nifty is up close around 500 points. But when these big heavyweights, they say, let's play along, then it definitely helps the Bulls' cause. But let's see whether or not you should be trading the Nifty at this point of time. Ashwini Gujral joins in. Ashwini, what mean difficult to buy the Nifty when it's up close around 80 points? But do you suggest go in for that trade or just stay away? And if someone had a long position, then what do? Where do they place their stop loss?
Well, you see, the difficulty on such days is that the market gets skewed by one or two stocks. So while a lot of banks have come off their highs, like ICICI Bank or you know, some of the others, SBI, etc., you know, there's just one bank, HDFC Bank, which is holding on. Now, you know, this is like a big gap down. If you don't get follow through, you'll start seeing upside. And if you have a gap up and you don't get follow through, again, you'll start seeing downside. So given that a lot of sectors are now trading in the red, you know, upside seems difficult. If people want to take, you know, a brave trade, maybe, you know, getting short on the bank nifty won't be such a bad idea, because whatever the news, it's been discounted both yesterday and today. So that way, once HDFC Bank also comes in for a little profit booking, or other banks kind of come off, you could make some money on the downside. On the upside, it doesn't look like, today itself you have 200 points upside on the bank nifty left now. So I think evenly poised, and post 11 o'clock you could either gain or lose some. My bet would be that given the sort of rallies we've seen in the last couple of days, some amount of profit booking should not be ruled out. After all, it's not a confirmed news. It's not like money is coming here. Like if you see PSU banks, they opened 2.5% higher. Right now the index is 0.78 higher. So slowly, if sanity returns, I think 500 up can easily become 300 up only. So I am betting more on that scenario. As far as individual stocks right now are concerned, Edelweiss is a buy with a stop of 276, target of 292. Adani Power, that is a sell with a stop of 41, target of 35. And Hindalco is a sell with a stop of 260, target of 246.
Right, an interesting call there, Ashwini, with the bank nifty short it for a target of 200 points on the downside, and a couple of short trades as well. But a couple of these companies, Ashwini, with a lot of debt beleaguering them, Jaiprakash Associate, GMR Infra rose yesterday too. Do you think there is more for these companies? Jaiprakash Associate has been down this month though.
See, from a very charting type angle, 17 thereabouts is the 200-day moving average on JP. So each time it gets closer to those levels, something works out and it tends to go higher. I would think if the market holds up, I think 27, 28 is possible on JP.
All right, 27, 28 on JP. With that, thanks a lot, Ashwini. We'll keep coming back to you all through the course of this day. But one stock that is buzzing in trade, Jubilant Life. After delivering a strong third quarter performance, the management too was fairly confident in its earnings call. Macquarie has reiterated its outperform call in the stock. So let's hear out what the management actually had to say in the investor conference call yesterday.
We are very confident of delivering a very robust business performance driven by healthy demand in specialty pharmaceutical injectable and favorable pricing environment in LSI segment. We expect our strategic initiatives in capacity enhancements, new product launches, enhancing process efficiencies are going to help us to deliver a strong performance going forward in Q4 FY18 and FY19. We continue our efforts to generate higher operating cash flows and utilize the same for marginal expansion and reduction of debt to further strengthen the balance sheet with improved financial ratios.
Smoking hot is ITC at the high point of the day, up nearly 2.5%. Currently trades at 25 times versus Hindustan Unilever at 49 times. So, bit of a discount play taking place out there. Remember, they report their numbers. We'll keep an eye out on that. But talking about numbers, Shrey Infra in focus after delivering a good third quarter performance. To discuss this and more, now we're joined by Mr. Sunil Kanoria on the show. He's the vice chairman of the company. Thanks a lot, Mr. Kanoria, for joining in. We're going through your numbers. Just one thing that really stands out as we cannot get our heads around it is the fact that your AUM growth, your assets under management, that grew by about 4.3% quarter on quarter. The loan, they declined quarter on quarter. But despite that, your interest income, that came in higher by 12.2%. So, did you charge higher yields to your customers?
Well, not exactly per se. If you look at the previous quarter, we had some large businesses which we had done. So, the impact and the earnings of that comes in this quarter. When you do the disbursement and business, the earnings start to follow after a few months. So that's where the lag is. And therefore, you see those anomalies. But if you see overall from the previous year to this year, whether it is overall disbursements have grown over 30%, my AUM has grown over 20%, and the PAT has also grown on a consolidated basis almost close to 50% over the previous 9 months to the current 9 months. And also, of course, on the gross NPLs also has come down marginally lower from 2.9% to 2.5%.
All right, 2.9 to 2.5%. Okay, all right. So there's some improvement in asset quality as you're telling us those numbers. We should get it up for you on the screen as well. Well, Mr. Kanoria, if you could share some details on Shrey equipment, or if you could give us some details of it in your release as of now.
Well, basically that as we have already filed our DRHP and we are waiting for the SEBI clearance, we are raising capital in the Shrey equipment and we propose to list the company hopefully very soon, and therefore we can't share much details beyond that as per the regulatory guidelines. But basically that's where we are in that. The business is overall doing well. The growth in the overall infrastructure sector is good. We are seeing good buoyancy. A lot of work is happening in multiple infra sectors, primarily the roads, irrigation, etc., which is fueling the growth. And we expect that in the coming years, the growth will help us in the sector to also grow fairly well.
So you spoke about it being IPO bound. You want to raise some capital. If you could tell us the capital requirements that you have for the equipment finance business, because we understand you're fairly well capitalized. What kind of money are you looking to raise?
Well, if you look at our overall capital adequacy in both the companies is just a little above the regulatory capital. And as I said that the growth is now come in. This year we have had a good growth of disbursements of over 30%, and we expect this trend to continue. So we need capital to grow, and that's the reason why we are listing the company, and we hope to raise approximately 1800 crores both for primary and secondary capital, which we have already filed with SEBI, and we hope and we are trying to see if we can get the capital raised before the financial year end.
Coming back asset quality point, Mr. Kanoria, you said 2.5% versus 2.9%. You're referring it to it on a sequential basis or on a year-on-year basis?
On a year-on-year basis.
On a year-on-year basis. On a sequential basis, what would that number compare to?
It is marginally coming down. The trend is lower slightly. As I said in the past also, that it will take some more quarters in the infra business to get further settlement.
I think, sir, in the second quarter it was 2.1%. If you could help us out with that number, sir.
Pardon me?
The gross NPA number, it's 2.5% as you're telling us.
Could you repeat that again?
The gross NPA number, as you're telling us, it's around 2.5%.
That's right.
We're asking you whether on a sequential basis it compares with around 2.1%, isn't it?
Sequential of the previous quarter?
Yep. Yep, quarter on quarter.
Previous quarter, I would not have the numbers offhand.
All right, okay. We have the numbers. I think it is 2.1. That means
the
quarter
to quarter, I would not have the.
We have the
numbers.
And before we let you go, Mr. Kanoria, just one last question. We see the bond yields hardening. How does that impact your cost of funds?
It has a marginal impact because we are also in the markets to raise debt. But as most of our assets are all floating, so in case we find that the bond yields and our overall cost of fund is on an upward, if it is on an upward trend and we see that impact, then we will review our interest rate policies and see whether we need to do any change in that.
All right, Mr. Kanoria, thanks so much for stopping by, detailing those numbers. Until next time, we'll wait by to see what's the plan in terms of the IPO and how's the asset quality moves, as well as we'll keep an eye out on the disbursements as well going ahead. But moving on then, former RBI Governor Raghuram Rajan, in an exclusive with CNBC, says that central banks will have to raise rates gradually, and he adds that the US tax plan will boost the economy. Listen in, we'll be back in 2 minutes.
I think there's good news, which is what the stock market is reacting to. The fact that all the economies are now growing together, which hasn't been there for a long time. And of course, in the US, the tax cut, the corporate tax cut has been useful in terms of corporate profitability and so on. So some of that is a reaction to the good news on that front. At some point, the markets also have to recognize the fact that interest rates will slowly start climbing up. Now, the hope is it's going to be gradual, very slowly, that even as the Federal Reserve sort of unwinds its portfolio, the Bank of Japan will continue buying and the ECB will take some time. Now, all this is going to happen. The question is at what pace. If it can happen at a measured pace, the hope is that stock prices and other asset prices, whatever air there is, will leak out very slowly rather than abruptly.
Time for a drink then. Jagjit Industries is the stock in focus. It's up close to around 35% in this year, so it's been a good start, and it's up 80% in the last 12 months. To discuss this and more, we're currently joined by Roshni Jaiswal, the promoter of the company. Hi, Ms. Jaiswal. Thanks so much, ma'am, for joining in. First things first, we wanted to talk about your refinancing. I believe you've just done that. What is the total debt in your books? If you could tell us how much of that is refinanced, and in terms of interest costs, how much would you save?
Well, we have a total debt today of 325 crores.
Okay.
With refinance, we've taken out KKR, which was very expensive debt to us, and we've repaid UBI Bank.
Okay.
So intrinsically, our debt from last year to this year hasn't changed, but interest cost to the company has significantly changed.
Could you specify what do you mean when you say significantly changed? Because last year you paid around 51 crores.
Yes, so I mean this year we are going to pay a substantially lower rate.
Which would be how much?
Which we would possibly close at about 10.5 to 11%.
So you would be paying around 32 crores. So does that mean that you will save around 20 crores on the interest cost itself?
Absolutely, we would, and you know, it's such a relief for us in so many ways, because the many things that we're doing on the back of the company, actually, where we will be able to actually significantly improve not just our sales and our volumes because of the working capital that's infused,
right,
but we will actually be able to possibly break even and even be profitable next year.
Wow, Ms. Jaiswal, that's a tall ask. Then you're saying it's a relief to the company. It's a big relief to your investors as well, because the stock has been moving quite well. But you know, there's talk about that you have some assets that you're looking to monetize as well. If you could give us a sense of that. What are these assets? What are they worth? And can they happen in the next 1 year? Can they happen in the next 6 months?
Well, we've already started looking at monetizing the assets. These assets the attempt is actually to be debt-free in the next few years. But I'm trying
What are the assets, ma'am?
The assets are non-core assets. There are factories that have been closed down and have been closed for several years.
And the money that you're looking to raise from that?
We would possibly raise about 120. And so we would hopefully be able to raise this in the next 12 to 18 months, and that's the debt that we would reduce in the next 12 to 18 months. So the attempt is actually to, you know, really try to be debt-free in the next few years.
All right, fair point. But what exactly happened to that KKR deal? Because I remember you were there on our channel when that KKR deal happened and it was refinanced. You said this itself will take our interest cost lower. Come 1 year later, you say that was a little expensive. Now you've refinanced it. Till when does this cycle continue? How is one to say that this is the final reduction plan?
Well, you know, it has. This is the final reduction because, I mean, as of now, we have managed to achieve what we needed to. I think last year for us, for many reasons, we hit many roadblocks from a demonetization perspective, from a highway ban perspective, a lot of things that cost the company a lot. Now going forward, a lot of the back-end work, Nigel, has been completed. So we are very ready. You know, even if you, I mean, these losses, I mean, if you look at our losses last year, they were significant. So if you even look at our losses this year, we've already become EBITDA positive for the last 5 quarters, and our losses have also, which will be declared this year at the end of this quarter, you'll see are halved, if not less.
Okay, all right.
So it's moving in the right direction.
All right, Ms. Jaiswal, thanks so much for stopping by and giving us those details. We'd like to chat more with you in terms of what's the outlook going ahead, but you've completely run out of time. All the best for the remainder of this fiscal as well as next. We'll wrap up on Chartbusters. You stay with us.